back to Primary Source China Investment. Peng.guo and I are here with show L4. And this week, we're reminding viewers to follow the China data and messaging. We're not going to make any comments about balloons or weathers or spies or anything like that. We're going to stick to the economy. And there's ample supply of hopium out there relative to China's reopening. Absolutely, opening is better than continual shutdown. And as long as the healthcare can be supplied, it's great news for the overall economy, the global economy. But this reopening is absolutely different. This reopening is squarely on the shoulders of the consumers. Previous recoveries, as you may recall, we've talked about a lot, have been led by heavy doses of stimulus. Recall the property, recall the banks, recall the lending, rates, all those kind of things were the drivers of the stimulus in previous time. This time, it will be different. The reason stimulus isn't on the table is because Beijing is already worried about debt levels. And they're also worried about interest rates. So Peng.guo, what do you think? There will or will not be some sort of stimulus, or is Beijing just relying on this opening up to stimulate the economy?
I think opening up is really like the natural way to do it. So as long as they decided to get open, I think right now most of things back to normal. And most of the people don't talk about the COVID anymore, and you can see about that. Everybody is just worried about what should they do for the next step. The debt level is definitely is a bigger topic for the next step. The bottom line is right now is still welcome the private company and the private sector to do that. And I think that is, and also you will see the internet company like the bigger tycoons, they all show up and talk about the future plan. That's really the signal to see a private economy, and definitely it's the pillar of the entire China. The debt problem is really came from the local government as well as the enterprise debt. So those two things is a potential risk. The bottom line is
similar to like a municipal bond situation here in the U.S.
That's right. Yeah. That is really like the local government. They are in a huge deficit, so they don't have the enough source to support it and trigger the big debt problem.
The other thing I wanted to mention was this idea of capital flight, right? So Beijing is a little bit worried about capital flight. You have already interest rates in the US that are higher than, well, US dollar denominated returns are higher than renminbi denominated returns. So just on the 10-year, the US 10-year is 3.5, China's 10-year is 2.9. So if you start to do too much stimulus, you're going to have people trying to take their money out of China, put it into other currencies for a better return. So all of these things are working in consort. You know, as the FT put it, more Chinese households going to restaurants and theme parks will have a lot less impact on other countries than more Chinese high-speed trains or apartment buildings would. So this is also discussing this reopening as more localized than international.
I think the capital flow should be the short term because it already get a lockdown for the 3 years, so almost 3 years. So it's naturally people needed to adjust it and move the money in and out of the China, but it's not an easy way to move in or move out. So definitely that at least should be the short term. As long as they make the adjustment, we're going to relatively stable. I think China maybe face a lot of the challenges. The biggest thing I think people should be focused on which area could be the engine and could grow.
And that's right. The consumer. So where is the consumer going to turn?
The consumer is hard to say that. I think the bottom line is most of the people just after the revenge consumptions, they probably still watch.
Yeah, I
income
totally
cannot
agree.
get growth.
I totally agree. I think a lot. That's what I said when we started. We said there's a lot of hopium out there. People are hoping that the Chinese are going to all of a sudden open up their wallets and spend all their hard-saved cash. I don't know if they're going to do that. I think people are going to be a little bit more cautious.
That's exactly right. I think after that, and people really need to see the growth, to see the hope, and then they can decide what to do for the next step. So right now,
that's an excellent point, Peng.Guo. They want to see the growth, and then they'll see hope.
Yeah, that's China is really trying to figure out. I think the new energy related upstream, downstream, and the new tech, that is the hope. So you will see hard technology or software or anything. As long as you can do the innovation and meet the customer service, you should be able to get the support from the government and the capital market.
Yeah, along that line, there's this company BYD is, I guess it's listed in US, but it's a China-based company. I was looking at EV sales of automobiles on the mainland. This is a little bit of a digression, but I thought it was fascinating. Like the market share for BYD versus Tesla in China. So if I had to guess, I would have guessed that Tesla and BYD were similar. BYD has 30% market share in China. Tesla has 7% market share in China. If you look at the US, Tesla's share in the US, 60% of the EV market. I was shocked by these numbers. So in China, BYD is 30%, Tesla is 7%, and in the US, Tesla is 60% of the EV market.
Yeah, I read some news yesterday. I think Tesla is still probably number one or number two in China market. So definitely is like
no, BYD. BYD is number one.
Oh yeah, BYD. Yeah, BYD is number one. You see the bounce back recently. We also noticed that one because from the market chart, it's already a lot of the bottom signal is showing Tesla will get the bounce. We know that almost 1 month ago.
I don't know. I mean, I don't like to follow the stock specifically, but I just look at from the technology side. BYD was a battery maker that went into automobiles, and some people say that BYD has a big advantage because of their battery making prowess, but just the market share was a little bit surprising to me. And in the US, Tesla's 60%, nobody's even close in the US. Although that's probably Tesla's got a lot more way to go down in the US, maybe some way to go up in China. I don't know. It remains to be seen. But this is the sort of idea about local competitors. I mean, Tesla gets all the headline news. I mean, BYD does as well because of Berkshire Hathaway, but certainly BYD's 30% versus Tesla's 7% in China was a surprise to me. So we're going to end it here with show L4. Thanks for tuning in. We'll be back next week.
Thank you, everyone. See you next time.